Ladies and gentlemen, welcome to the Fintech Frenzy. Today, we have more SoFi to talk about. I mean, come on, how can we not whenever SoFi is running up and closing the day at $16.41 a share? I mean, that is very, very exciting. Let's go ahead and flip the screen over and take a look at this. Holy. Boom. SoFi, $16.41. Still getting crushed by the S&P if you bought in at IPO, but that's okay. All right. If you bought in recently, dummying it. That being said, obviously, and I don't even think that's right. It should be 120%. Year to date should be, 60%, but it looks like January is on quite a high versus what it was previously. Just in the last 3 months, we're up 114.5%. Think about some of the options that some of you guys have that are just absolutely printing. Insane. But we have some news to cover as well. So let's get to that as well. Hopefully everyone's doing well. Let me see some names in the chat. But 8:30, 59 seconds start time. I don't think that's true. No, it just says 8:30 actually. I was on time. On time. Zero fact checking possible, but okay, let's see here. Bear with me. So there were a couple different things that ended up happening today. There is this, which is probably the biggest and most bullish news, which is the fact that the great and powerful Tevis is starting to get a little fearful. Okay, let's take a look here. Tevis said, seeing some of these SoFi, Tesla, HIMS, and Bitcoin, many more gains screenshots, meaning people are showing off the fact that they're making lots of money. And I know I'll get hate for this, but it's an obligatory, I don't know why that word just absolutely killed me there. Obligatory reminder from 2021 Tevis. If it's good enough for a screenshot, it's good enough to sell or at least lock in some profits. Well, Tevis, did you sell again? If so, we might have been locked in for $17 or $18 a share. CM gave $10. Thank you so much, my friend. This used to buy me like 2 shares of SoFi. Now it doesn't even get me 1. Crazy. Crazy. Never seen a more bullish tweet. I know, seriously. Yeah. CM said, hey, Tanner, your content helped me out a lot to pull the trigger on SoFi around the $8 mark. Well, happy that that was the case. That's awesome. You just made a double. I appreciate the support. That's awesome. So there was some supposed bearish news today that I wanted to talk to you guys about because there were some newly registered securities for SoFi. They had seen some dilution, or at least that's what it can be seen as at first glance. Now, let's take a look here. SoFi has registered quite the amount of new shares. Now, some initial reactions was, oh my God, SoFi is diluting shareholders. This is going to kill the stock. Not the case. Okay. What's great about this is that this is why there is, the normal amount of common shares that are outstanding, and then there's fully diluted common shares, which means not only are we accounting for what's already out there, but we're already accounting for what is going to be eventually shown off into public shares going forward. So things like options contracts into the future of people's employments, people's packages that they have into the future will already be accounted for in their fully diluted share count, right? So you can kind of see what's to come already. So don't worry about this. For the most part, that is what it's looking like is, employee benefits packages that have already been established, that's already being priced into EPS, and that it'll have no effect on the total outcome of the amounts that SoFi sees. Another thing that I want to talk about, because as people worry about dilution for SoFi, is the fact that they guided for 2026. Not only did they guide for EPS in 2024, but they also have midterm guidance for 2026. Okay. They show it off in EPS terms, not net income terms, meaning earnings per share. So it doesn't matter how many shares are outstanding at the end if they continue to hold up their same expectations for EPS, right? So let's say they end up doubling total share count and the total voting rights for you as a shareholder gets cut in half. That would be awful, right? Like worse news. But if EPS still comes in at 55 to 80 cents, it will have the same impact or profitability on a per share basis. So you'll be fine regardless. Now, that's not going to happen. I'm just taking that example to absolute extremes, but this is why EPS is such a magical target. It's not just to make the number super small, it's to include dilution and say, hey, regardless of what we do on our end, like you get to see not only our midterm guidance for profitability for net income, but also for dilution as well. All right. 52-week highs again and again and again. Yes, sir. Yes. Which one is better in the next year, SoFi or Palantir? I mean, I've got my bet, but you know, other people can say both. My bet would be on SoFi. Okay. Just because of the run up that Palantir has had, I think that it'll be an amazing year for both of them in terms of new revenue, new profitability. It's just a matter of the stock. How much are you pricing in for growth for Palantir and how much are you pricing in for growth for SoFi? Okay. Palantir is holding up an egregious PEG ratio and SoFi is still under 1x. So maybe Palantir even grows faster than SoFi. And I mean, that's to be expected. Margins are to be much higher, but it's still, they're asking for a lot. Now, the thing is that gives Palantir maybe the upper edge or the reason for the valuation is that this might happen for 5 years in a row, right? This could happen for 10 years in a row, where SoFi is going to go through these periods of good and bad times as the macro shifts. The craziest thing is that if you take a quick glance at SoFi's business, it doesn't look like they've been going through ebbs and flows. Because this is the great thing about the diversification of the business is that, yes, we do like similarly to Robinhood, but even to a better extent, right? Robinhood during the time whenever interest rates were really low versus really high, they had this period of going from transactional revenue and then started to bring up net interest revenue. But during that period, there was this period where transactional revenue dropped and this had to wait before it went up. Well, the year that they sort of showed off both of them at a low, that was not very good. And then the stock ended up going from like $85 a share down to like single digits. But SoFi didn't really see that, right? They sort of went through a period where there was a phase where growth ended up slowing a lot, is particularly in certain segments like lending, but it never actually ended up stop growing. Every single quarter was bigger than the quarter before, up until the most recent couple quarters, which are just the reason why it wasn't growing faster than before is because we saw, immense growth rates in a few quarters. But even then, we still saw massive growth year over year. The real question is Hood versus SoFi in 2025. I also think the same for the stocks. I couldn't pick. I couldn't pick. It'll be dependent on where crypto markets go. If crypto goes to, let's say, $150,000 for Bitcoin or 200,000, as some people are saying, these crazy numbers as they get very bullish, well, Robinhood's going to destroy SoFi. If we get sort of this stagnating crypto market where we're not just quite breaking the $100,000 mark, then SoFi could do better because lending is going to do quite well. But honestly, I'd bet on both. Rocket Lab only goes up. That's a comment. There's no dividends, so I see more value in holding, but wasn't sure if I was missing anything. Okay. Oh, sorry. You're talking about your options. I was wondering what you were talking about. Got you. Yeah. So There was another thing too that ended up happening on X, which I thought was very interesting, which was this back and forth with a couple members of the fintech and finance community on X. Maxfield on Banks has had sort of a rough week. He came out and said that SoFi wasn't doing anything particularly special. And I mean, we've got a pretty passionate group of investors here that got very, very passionate about the idea that he was not correct. Okay. Alan Pawlowski here, who actually ended up working with Anthony Noto, like through SoFi directly under him. So listen to this. You are correct. We're a passionate group. I worked there for almost 2 years, most of the time reporting directly to Anthony Noto. I've made most of my career as a short seller, so I don't come by, long passion easily. The passion comes from having worked for Anthony through the pandemic when student lending went away. Anthony is to consumer fintech what Jamie Dimon is to commercial banking, at least. During my orientation, Anthony Noto personally presented the vision and values to the upcoming class so that there were no misunderstandings. After he carefully presented the values, he went back over each and discussed how they could be and have, I'm reading this like terribly. Discussed how they could be and how they have been weaponized when misunderstood. He is the most inspirational leader I've encountered. His plan for SoFi is methodical, and thus far, he has executed flawlessly. Even if investors can't see as they compare SoFi to rapidly profitable monolines and short sellers pipe on and collude around things that like fair value accounting or deal structures or other side issues. So yes, I am passionate. Dude, I don't know what's up with my reading today. I apologize. I must be fuzzy up here. Anyway, you get the idea. The most passionate, you're having people that usually see from a very pessimistic view, which I think you kind of have to be if you're going to be a short seller. And they are super passionate about SoFi, especially whenever having seen the leadership of the company. And then you remember all the people who have been in these chats that say, hey, you know what? Let's make Anthony Noto resign. It's like, dude, there is no SoFi if there was no Anthony Noto. Like, tried gifting 5 members but didn't go through. Michael, thank you so much, brother. I do appreciate your continued support. It's awesome. Thank you. Thank you. Thank you. Sorry to the 5 members that could have been, but yeah, we got a SoFi Weekly After Hours coming out after tonight. We're going to be recording the SoFi Weekly. So after this show, we got more SoFi and fintech to talk about. But yeah, and probably some general market news is what we really talk about in the After Hours. It's not always about SoFi. Just so you're aware, if you're going to the SoFi Weekly After Hours to get some exclusive SoFi content, you're really not going to see it. It's mainly about other plays that we have in the market outside of SoFi. No one cares about what Tevis does. I do care about what Tevis does because if he trims, that's very bullish for me. That is very bullish. Touch on Nubank. So I just think that they're facing some macro headwinds. Like, there's definitely some currency risks there. People are getting a little bit worried. There's some taxation issues there. People are getting a little bit worried. Their last quarter, they saw trimming, or not, I don't want to say trimming, stagnating credit card growth on their Brazil side. Not very excited about that. And they also didn't disclose all of their individual numbers for their entire business, which made me sad, but not bearish. I haven't trimmed a single share of Nubank. And in fact, I'll add more as time goes on, but have not added since the rise from, 15 downward. I have not. But, maybe soon. Why can't I get rid of that comment? Okay, there you go. Tevis is inverse Kramer? Like inverse Kramer? Like whatever he says is long, or... No, I'm not in Grab right now. can seem exciting, but honestly, genuinely, I don't think I want exposure to another geography. I have Latin America, I have North America. I'm very excited about that. I'm sure there will be a play, especially like somewhere in India, where I'd get very excited. But I also heard a comment about Grab that one of the stipulations between Uber and Grab is that they won't continue growing geographically and that they can only grow internally, which there is a lot of growth there. But it's like, why would I get Grab when I could double down on New? You know, New is going to go all over the world. They're not beholden to anyone. 10 to 30,000 by New Year's. Let's go. I don't know what happened yesterday. I gained like 600 people, like new subscribers on YouTube. I didn't even see that big of a rush in new viewership. I hope it's not like a bot attack or something. I don't know like what they have to gain by subscribing, but yeah, it did seem odd. It like broke my records. I was seeing like my subscribers doing this, and then like the other day it went like Tanner, what are you buying then? Give us the next SoFi. I'm anti this comment. Okay. Like, I've told you what I buy. I told you what I hold. Why can't those be the things to hold? Why are we always looking to sell and buy new things? You know? Yeah, Michael has SoFi is the next SoFi. I don't get it. Like we shouldn't always chase like if we say 5 to 10 year hold, why are we not holding for 5 to 10 years? You know? Now, Rami, I'm not picking on you. It's just a comment that I see all the time. And I thought I'd address it right now. So, like, for example, I showed off another company that is definitely one of the newest fintechs that I got my hands on, and one of just the overall newest stocks that I have in my portfolio, and that is Shift4. Okay. And I'm very excited about it. I think that is a great company for the payment space. Great leadership. I showed that all off, but that is another play. Like, what more do you want from me? You know? Yeah, if it does a Palantir and just goes to like, I mean, it won't go to 60, but let's say, you know, SoFi miraculously just ends up breaking into this new target. Like, people get super bullish. It runs up to 35, 40 immediately. I mean, we're definitely in big trimming territory. No. I won't sell SoFi for the next 10 years, but you don't want to buy more. Well, I also think that like if you have money just sitting around, you're looking to place it into somewhere. What I instantly do is I can just buy indexes while I wait. So I'll bet on the United States economy while I wait for individual plays. Can you talk about where you think Nubank will be expanding next? I never thought the UK until recently. So the UK potentially. Uh, Argentina is definitely huge on that list, and most like if I had to put money down on it, it's probably there. Like, I think Latin America they'll try to get into just because localization will be the easiest thing, except every single geography that they have to add to now, other than Argentina, will have a smaller and smaller addressable market by like huge margins. So if they get into like Bolivia or Peru or Chile or any of these places, it's just smaller and smaller total addressable markets. Now, it doesn't hurt their TAM, but what I really think that they're trying to do is get into areas that have higher assets under management or just, you know, higher ARPUs per like I was going to say per user, that's included in the term. So higher ARPUs and then potentially higher populations in general. And they want to find places like, obviously, you could just say, hey, they just go up north into the United States. What I really think they're trying to find is areas that it just have no competition. Have you heard of Archer Aviation? Yes, I have. I'm not interested, though. Too early for me. Have I heard of Sezzle? Yes, I'm too late on that one. Will SoFi be expanding into different countries soon? I wouldn't bank on it unless macro gets extremely favorable. I mean, like interest rates drop and drop and drop and drop, and then they potentially look to leverage some debt to get into more, like back into that sort of growth at all costs sort of phase, and then they look to expand internationally again. They were getting into like what was it? The 3-letter term, UAE. They were looking at the UAE. They were looking at Singapore. They were looking at Canada. Now they're saying they're looking at Latin America. So, yeah. Have you guys heard of Aerotyne International? I literally feel like this is the chat right now. I feel like the chat is trying to sell me on some new radar detectors that have both civilian and what is it? Civilian and government utility, and yeah. No, Aerotyne, not Aerodyne. Aerotyne. That's why I like B-dubs. This is why he's got the wrench. He gets me. Greetings from Thunder Bay. What's up? That'd be the drive. Yeah, I mean, I do appreciate a lot of the tickers because some, like, from time to time I will pick up stocks. I've got a, should I keep it a secret? I don't know. I've got a guy who has sneakily thrown a couple names my way, and I've looked into them after he's said those, and I've been a shareholder in a lot of those companies. And so that's how I found out Shift 4 was a commenter who said, "Hey, you ever heard of 4?" Another one was about Adyen. You know, I've made great money on both of those plays. And yeah. Yeah, you get it, brother. That's too funny. All right. So here's another thing that's very interesting with SoFi. SoFi stock price, what it leads to in market cap. Okay. Currently, we are at $16.41, which means SoFi gets a market cap of roughly, I don't know if you guys can see it here, but 17.8 billion. You can just see it here, the one with the little dots here. Okay. 17.8 billion in market cap. Well, that's very interesting because S&P inclusion is 18 billion. 18 billion. So we're right there. Now that doesn't mean that we get into the S&P 500. That just means that we've broken into the clock that starts, that we have to actually be in, I think it's 60 days, that we have to hold over 18 billion to then be eligible for the S&P 500. We have every other checkbox checked off, aside from S&P 500 inclusion, and then we will gain, well, no, that also doesn't mean that we gain entry. Sorry, I almost just lied to you. Then that means that we could potentially be selected. Now, I think 100% of the time, Robinhood gets selected before us. So until Robinhood's there, SoFi's not getting there. And Robinhood has been eligible for some time. June 2025, I don't think so. I don't know if it'll be in 2025. I'd be hopeful, but it would be the longest stretch. There's a lot of companies doing great things. There is a lot of companies who were not eligible that are now eligible over the last 3 months. Okay? A lot. No purchased Tanner's course and then SoFi exploded. Do the math. You know what though? What is so funny is whenever that came out, I got crazy hate. And now it's SoFi's doing well. Everyone's like, all right, I'll check it out. But for the people who don't want to buy it, I have videos covering all the ways that I like to, talk or value companies or how I look at them. It's what the FinTech Frenzy's for. Not like there's some magical secret in that course. What it is just a compact, like understanding, like there's no fluff. It's back to back to back to back to back, every single way that I look at a company demonstrated on SoFi. So you get to see SoFi front to back, why I like it, and then every single checkbox that I like to check before I end up buying a company and like go balls to the wall into that position. So that and you can look silly whenever you are betting on companies and you're early. But if they continue to compound, they can only be ignored for so long. And I think that's what we're seeing here on SoFi, is that members are going up. The adoption of financial technology companies over incumbent banks is skyrocketing. Okay. And so the total addressable markets there is one of the biggest things. If you guys get the course, it's like the biggest thing that I cover is total addressable markets. I'm a student of Don Valentine, and that's another thing too. A lot of everything that I learn from is just greater investors than myself, and I try to distill what they do because obviously it's worked. They have 40 plus years on average of like investment, like historical investment data, and they are saying, well, this is what I followed. Okay, well, why would I try to create my own, theories whenever I can go off the greats who have already done it before me? That doesn't mean that I just go after growth investors. I take a lot from Charlie Munger and Warren Buffett, and I've got case studies on all of those great guys. But yeah. Is Neo a dead horse? I'm not really following it right now. Yeah, the SpaceX thing is not. I see people talking about it being an IPO. It's not an IPO. It's a tender offering, which means one of two things. One, they're potentially raising money so then they can give more to their employees as benefits, or they're buying shares back from their employees as sort of a private buyback program, which would be good for the company, but that has nothing to do with an initial public offering. Well, I appreciate that, Danny. You've always been way too nice. Thank you. Why not Lending Tree? I mean, just mainly market cap. It's just not the size that I really like to look at. But I do read a lot of their articles and some of their stuff. Live, your live stream? This is live. Gary, I just read your comment right now. What's it called? But sorry, Lending Tree, not Lending Club, by the way. I read a lot of their articles whenever they talk about things like consumer behavior stuff or total addressable market stuff or macro flipping. They like to talk about a lot of that for their own company behaviors. But I also like to distill that and say, hey, how does this affect the likes of SoFi, Lending Club, Lending Tree, all the likes? What's the over under? How many times Tanner has read The Intelligent Investor from front to back? Only once. It's right there, by the way. I don't know if you guys can pick that out of the crowd, but yeah. I wish I had more books, like physical books. It would look a lot better in the background. But honestly, I'm a big audio guy and a big um, like digital reader guy. What areas of growth are you researching now? Honestly, it's just like I'm 100% in tech, and then in tech, it's like a lot of EV right now, energy, chips, digital banking, cryptocurrency. I don't really sway too far out of that. Some cybersecurity, trying to get it. Have a very small position in a very small company in that space, but yeah, learning. Obviously, I know that the TAM is going to be so massive because as the world gets more digital, the security there's like just has to be a play. So, do I have Intel? No, I'm super like so. Okay, I got really bullish on Intel, and then I got very bearish on Intel whenever Jensen Huang was talking about potentially replacing CPUs with GPUs. I was like, all right, well, if Jensen wants your lunch, I don't want any part of that. And then whenever grants got cut, I was like, fuck, absolutely not. Um, PayPal as a yawn, yeah, it definitely doesn't fit into my growth investing stuff. I've said this a bunch. I don't look at it as a growth company as much as I look at it as not a value company that is in deep value territory. So that is more of a trade for me. It's not a long-term hold. Super unlike what I do, but I've told you that from the start. So Palo Alto is the Cadillac of cybersecurity. I'm well aware. Uh, Dennis says, how do you expect SoFi to perform if Trump policies, mass deportations, and tariffs cause the American economy to fall into a recession? My expectation is that this will come to fruition by mid 2026. I think that you're making um, some grand assumptions there. I'm not going to say, I really do not get political here, but whenever you say Trump policies, you are picking out the ones that are hurting the economy the most and not the ones like lowering corporate tax rates or potentially deregulation that would help SoFi. So I think the real like sort of math here is how do you balance which one's more important for SoFi? Um, yeah, I guess that would be the thing. Thank you so much for donating, but it's hard for me to sort of give my opinion on that without getting political. Um, why is PayPal not a long hold for you? I just don't think like so. Is PayPal capturing the younger audience? In some degree, it is with Venmo, but even then, I don't think that they're growing as fast as some of their other players. I do believe that on the uh, sort of white label payment processing side, Stripe and Adyen are going to do so much better than Braintree. So I really worry about Braintree side. Venmo has a hard time being monetized. So there are growth aspects there. Like whenever people are betting on no growth and you have these platforms that could potentially start to monetize, I do see it. But if you're talking about, okay, well, is Venmo going to go from 60 to 80 million users to 240 million? I just don't believe it. Like there was a real globalization of PayPal and that worked. But now, like I don't know. I just don't have a feeling that PayPal is going to be what it once was. Um, and I think that they can make a lot of money in the ad platforms and taking advantage of the current user base that they already have. I just don't see it increasing from here. And I like to bet on the companies that have really large increasing user bases because not only will I have to bet on the user base increasing, but then I can also bet on the revenue per user increasing. Like multiple S curves happening at the exact same time is really what I look for a growth company, and I just don't see that from PayPal. And that could be due to their size itself, right? Like what's funny about investing is people will be like wherever you're buying in is the benchmark of where it's going. So if you buy, Apple now and you say, well, Apple's the absolute biggest and best, so obviously they're going to win. It's like, okay, but like there have been multiple millions of investors that have already benefited from that growth already. You're betting on the future. So is Apple going to double from here? And how long does that take? So, like, do I think Apple is going to have a good future? Sure. As a growth investor, would I bet on them? Absolutely not. Absolutely not. Would I bet on Nvidia? Yes, because they have massive amounts of growth ahead. And so, yeah, like Open Door, super interesting. Love the idea. I love what they used to be. I think that once the founder left, I don't know if they can still be the innovative player. They just seem like a shitty house flipping company. And they can make money that way, but they'll be hard pressed to call themselves a technology company. I really like stuff like, what was it? Open Door exclusives? Was it called exclusives or executives? I really like those plays. And then they just stopped coming. I think they actually got away from that. I think they closed that down, if I remember correctly. I follow them very, very little now. Then why not sell PayPal and buy more SoFi? Because investing is not just about picking the best companies, right? So if I were to bet on just the companies that I think are going to dominate, like I just pour all my money into like Tesla, Shopify, Adyen, CrowdStrike, Nvidia, and everything like this. And I mean, for the most part, that is a large part of my portfolio, to be real. But you can pick the most hyper growth companies. The problem is that there's another aspect to growth, and that's valuation. That's the counter. This is the balance. Like, if you were literally to look at like the scales, it's just growth and valuation, and you want to find that tipping point. So you can have value stocks that are way out of whack. Like, not only is their value down, but their growth is so down that it actually makes the value look like it's expensive, even though their growth and value are way down. Like, it can still be off kilter. PayPal, I believe, although they do not have a lot of growth, investors are expecting no growth. So some growth would be good. Okay. But they're already in this tipping point of mature company looking to potentially offer dividends, get into this. Like, I'm not saying extinction is not the thing that I think of PayPal. Like, whenever I say an investment is no longer going to work, it doesn't mean bankruptcy. It doesn't mean that the player is going to come in and kill them. It just might take away their future TAM, which is exactly what's happening. They are losing market share because the payments companies, the payments industry is growing faster than PayPal is. And I really do not bet on Poet. I'd be very careful, dude. I'd be very careful. If there's one thing that I'd say is that a company that pays investors to tell them about their stock is not a company at all. They're worried about what their stock is doing and not worried about what their company is doing. I'd say that's the biggest red flag for, and like, maybe the company does fine. You will get diluted to crap because they're looking to feed themselves. Apple Cash will eat them alive in the next decade. Oh, well, I don't even think it has to eat. It just has to take away from their future members. Like, whenever kids are coming up and they're turning 13, 14, 15, 16, they're downloading their first financial apps. Where are they, like, what are they looking to potentially get? Are they getting PayPal to start sending their first transactions, or are they getting Cash App, Apple Pay, these sort of plays, potentially SoFi with youth accounts if they can get into that. But that's also something that they need to tell us. Like, are they actually capturing youth accounts, which is something that they want to get into? Ooh, what is this? Thank you, by the way. Holy crap, the donations are crazy today. I would have sold most of my SoFi holdings long ago if it wasn't for your insight into this company. My brokerage, IRA, and kids' college funds have all doubled. Thank you. Thank you, man. That's an awesome comment. I really appreciate that. However, like, please do your own due diligence, because in the same way that it doubled, it could have gotten cut in half. I don't want to tell people what to do with their investments. I just want to do it for my own investments. So my time horizon's not yours. That's a very awesome comment. That makes me feel amazing. But I don't want anyone to get burnt if things end up going the other direction. Thank you. Thank you. Not just for the money. I mean, the comment. That's very, very sweet thing to say. Strong man for life. All right. I have no problem with the problem that I have with people like that is, like, if you disagree with the way that I invest, that's perfectly fine. Like, I think that the way that he invests is not bad at all. You'll have a less volatile investing experience if you invest in ETFs, but you also limit yourself from ever trying to beat the market, because you're not only trying to match the market, you're also paying fees on that. It's so small that it doesn't matter, but, like, there is money to be made in investing in individual equities. I don't even play with options. Like the amount of risk that I could potentially put myself into with leverage, with like margin and options and leaps and all these other strategies that I do not go near. And for this whole community to come out and say that this is a dangerous way of investing and I'm potentially harming people by sharing my opinions on this, I just think it's childish. Like, not even child. It's just like misinformed. Like, he has his own reasons. Like he can say, I'm doing YouTube for monetization. I mean, like, yes, I'm monetized to share my ideas, but what do you think he's doing it for? You don't think he finds a new quote unquote scammer every single week? Like, he's cracking cases left, right, and center. You think he's doing this to to be super nice, or you think he's monetized? Anyway, it's very hard to call me anything that's going to hurt my feelings whenever my stock has, he was talking about like SoFi not hitting $10 back whenever I released the course in the $6 ranges, and now we're $10 higher than whenever I originally ended up pitching the course, which is the part that he hates. And I get that people don't like the course. It's just impossible to make my money's worth of putting together months worth of work into a thing that, if I would have posted directly on YouTube, would have gotten very little views. Like, you have to realize YouTube like really incentivizes these quick, catchy, like, here's the headline, here's what you have to know, to just talk about, like, okay, here is raw data, here's the spreadsheets, here is like let's go through an entire chapter on valuation. No one cares. So I have to monetize it, And for the people who do want to support, thank you. For the people who don't, that's perfectly fine. Come to the FinTech Frenzy. It's absolutely free, So, yeah. John, thank you, brother. I appreciate it. This is ridiculous. Thanks. Your course is great. Well worth the money. Thank you. Thank you. Thank you, James. And well, I'm here promoting it because I just feel like I should double down, right? We are going to be doing not only like on the Discord, which, by the way, how do I share this. I'll share it with Tevis's screen because he loves the course as well. Join the Discord down below, okay? And then if you go to futureinvesting.pro, you can get the course, and then you'll get exclusive access to my full portfolio. You'll see all the changes I think I'm uploading it bi-weekly. I might start doing it weekly, show all my buy-sell alerts, and then we'll be getting into live streams to do exactly this, sort of just get my opinions of stuff and have a back and forth conversation of what we're investing in and how I see it. You better dump all the donations into SoFi. Should I just take all the money that I got today? And maybe I'll do that. I'll just show you guys that I bought a bunch of shares tomorrow. I'll have to add it up, and then you guys can see that. I'll do that. I'll do that. All the money that I got today will go into SoFi at 16, or sorry, not tomorrow, on Monday. All right, you got a deal. All right, we have the SoFi Weekly coming up soon. I'm actually pretty good, actually. It starts at 10. We can chill. What's your record for longest live stream? I think it's pretty long. It's like 2.5 hours. I think something like that. I paid off my mortgage because of Tanner. Love you. I don't know if you're being honest. That's awesome, though. Congrats. Thank you. Guys, stop. Let's have a conversation. Let's talk about something. This is making me feel weird. It's just one good company. Have one more share. Yeah, I mean, it's got to be $17 now because that's what it'll be whenever Monday opens, eh? We got to be hopeful. End of year $18 is looking real juicy. I mean, it might even go higher. We're not even in frickin' December yet. I mean, we will be, but yeah. Okay, I'm curious. SoFi is already above 15, and there are other seemingly strong options at half that or under. Why should one consider a small investment in SoFi as opposed to just gaining more shares? Okay, so this is just, I'll use you as an example. I'm not going to try to beat you down, but you are a new investor, and I can tell that. So companies should be looked at as pies. This is how yeah, let's just say pies. I always use the term pie, but it works well. And like for example, I saw in the Discord, there were some people a little bit confused about Shift 4, and they said, why would I, buy Shift 4 at $115 whenever SoFi is $16? Well, the total pie of SoFi is 17.8 billion. Okay, Shift 4 is much smaller than that. It's a little over 10 billion. So it's actually about 70% smaller than SoFi, even though the share price is much larger. It's because the companies, whenever they go public, get to decide how many shares they want their stock divided into. Okay? And so you want it in a certain range where you're not a penny stock, but you also are small enough for company or like for people to buy into that are retail investors. But potentially other companies don't want that. Like there are some companies that will just have $3,000 price or like stock prices, and that's perfectly fine. But that doesn't make their company expensive. Okay, that just means that it might be expensive to buy one share versus 10 shares. But if one share of $1,000, 10x's, you have $10,000. If 10 shares at $100, 10x's, you still have $10,000. So it's the exact same. It doesn't matter. So look at the total market cap. That is what you need to look at whenever you're comparing company size. If you want to get even more particular, look at enterprise value, and then that will add on the debt onto the company and then subtract cash. Okay, that will tell you, hey, whenever you're buying this company, you're buying it with the skeletons in the closet. You're buying it with, the gold mine or the oil mine that's underneath it. Like, it comes with all the good and the bad. So market cap might not be the only metric that you want to look at. Maybe you want to also include enterprise value whenever you're looking at the total size of a business. Okay. And then you try to look at, okay, well, how much money does this company actually make? And then this is where price to earnings comes in. How much is the market cap divided by how much they actually make will tell you the multiple of how many years, if they made stagnant earnings, it would take for you to make that much money essentially. Okay. So for companies that have very fast growth, it might take them not very long. So you'll pay a very high price to earnings ratio, essentially, hopefully. But in a like sort of efficient market. In a non-efficient market, you can find companies like Shift4 that are trading at extremely low multiples, even though they're growing at 50+% rates. 50+%. That can seem like, $1 turns into 150. Okay, well, compound that over 10 years. Like you're growing extremely fast. So yeah, that's the sort of thing. You want to buy companies not just based on their share price, but the total market cap, and then also looked at on how much they make. That's the valuation. All right. I named my firstborn son after you. That's got to be the funniest one for sure. Um, Severely missed the boat on SoFi. I mean, yeah, you didn't get the multiple that we ended up buying, but you also didn't have the headache or opportunity costs. So you could have potentially bought in something that had, like, this is another thing too. Okay. Depending on your investment style, you could have purchased Nvidia and ran it all the way up to 145, sold it, and then bought SoFi at 14. Are you mad? No, because yeah, you didn't get SoFi at the best price, but you also bought something that was performing better than SoFi at that time. So you transitioned from a high performer to potentially the next high performer. I don't know if that, like, I would personally, I have both companies. I would never sell Nvidia for SoFi, but I'm just giving you guys a thing. I'm not recommending that trade at all. Yeah. Bradley Smith, welcome, brother. Thank you. Thanks so much. You'll get to see the SoFi Weekly After Hours. SoFi stock at 30 by end of year. Many people are predicting $45 a share by next year. I'd be hard pressed to see that. Yeah. I do think that there's a possibility that SoFi ends up getting to their upper bound range of $45 in the midpoint of 2026, but it's not my base case. Like, it will be hard to get there. They will need to show off amazing things. And we've gotten one really good quarter with the loan platform business. So it's too early to see, in my opinion, how fast it's going to grow. One thing that SoFi really has, which could hurt or double them, I mean, honestly, is 2025 guidance from a Wall Street perspective is really low. They're expecting like I showed off the Jeffries expectations. They're expecting like 11% revenue growth. Well, if SoFi comes out and they say, hey, not only are we going to do more than 20% like what we did in 2023, but we actually think we're going to succeed that. We think we're going to do, potentially getting close to 30%, if not 30%, due to the loan platform business, due to that recycling of lending where we're going in, we're getting loans, selling it to other institutions, using that money to get new customers and then recycle, like repeating the business. Well, there's a lot of freaking opportunity there for very fast growth. And if Wall Street's expecting, 11%, giving it 34.5 times price to earnings in 2026, and that's at 55 cents. If they get 80, if they beat 80 in 2026, then like they're going to dominate. And so this is also like there is massive price appreciation potential in January whenever they show off Q4, because it's not just like every year Q4 is the most important quarter for every company, because not every company, but a lot of companies, because not only do you get a new quarter of financial information, but you also get guidance for the next year. You get annual guidance. So then we get a picture into the next 4 quarters. So next quarter is giving us like 5 quarters of information. It's very important. So that can make or break us. But I expect more than 11% revenue growth. So I think that it'll outperform analyst expectations, and then they will have to reiterate quite quickly. I actually think the average analyst is somewhere around 17% or 16 to 17% next year revenue growth, but I have much higher hopes. So still, it'll be massive beats. Rat Pack says, is Nubank still planning on expanding into Argentina? As far as I know, yes. Knowing SoFi, they'll be just fine. Well, here's another thing too. Anthony Noto has proven himself 100% true. He is a wartime CEO. That dude, like, just understands the hardest of hard times. He gets it. How is he going to do in good times? Now, he was there in 2018 and beyond during good times, but we didn't really get to see a lot of transparency during that period. But still, I'd like to see him whenever winter is over, the sun is shining, and SoFi's full force, and employees are excited, and employees are reaching out to me, and they're saying, you know what, we are very exciting. Things are going well, and we're getting ready. $1 of EPS in 2026 bull case. I mean, that'd be sweet. What is Noto's background? Guys, you want to see this? Here, wait, let me find this real quick. I made a video that I look to a lot. You guys should check this out, because I look very different. Okay, anyway. I went through, and this was all the way back a year ago. It only has 5.8 thousand views. It's called Anthony J. Noto, Daring the Odds, Winning the Game, and talked about his entire background, like from school all the way to today. I got like crazy interviews back from like people that are old, like Goldman Sachs partners of his, like just crazy stuff. Articles on him that were from 2003. Okay. They used to call this dude Anthony Don't Know during the .com crisis because he was super bullish on the internet. Okay. Well, it turns out he was right. Like, you know, a lot of investors, a lot of growth investors were bad at our timing, but in terms of industry picks, like long term, he was like super bullish on the internet. By the time he actually got out of Goldman Sachs, he was known as the best analyst on Wall Street. This dude knows banking. I go through his Twitter days. I go through everything. So here, I'll just show you a funny little picture here I'm looking at. I look young, but whatever. So does Anthony. Going through his 1999 days. Hey? Yeah, whenever he's working at Kraft Foods. Anyway, that's the video. Anthony J. Noto, Daring the Odds, Winning the Game. It's a pretty good one. It's definitely one that I'm proud of. Proud of making. Said, is that 99 for you? Yeah. No, I was 2. I'm only 27. The stash might make me look older, but I'm definitely not. When you had 2K subscribers, I don't know if it was that long ago, but we'd gone through those days. All right. You look 47? No way. Come on. Tanner's younger than my wife? Oh, that's a funny comment. like somehow that's an insult or something. Thoughts on Nubank dip? I already covered it at the beginning of the video. You got to go back to like minute 3 or something. Okay, ladies and gentlemen, in 30 minutes, we're doing the SoFi Weekly on this channel. If you guys want to see that, we're going to have Tevis on, Roy, hopefully get Steve. It's going to be lots of fun. Can you talk about Solana? Super bullish on Solana. What more do you want? I thought that it was interesting. So during the interview with Mark Andreessen, he talked about how, Joe Rogan and Mark Andreessen. One of the things that really caught my ear was the idea that through AI, through all these deep fakes, through all this fake or artificial video, we're going to have to differentiate between what has been created artificially and what has been legitimate and from, especially like protected people. The next election that we go through is going to have real faked voices and real faked video, and there will be a lot more disinformation. So one thing that will be very important is verifying information digitally. And I think that'll be done on blockchain. Just like Mark Andreessen said, I 100% think that'll be the case. It was a really smart idea that he talked about. And what better to do that other than Solana? I absolutely think that Solana is going to own every single one of those transactions. They will be the largest utility, whether that's for money, for verifying, for NFTs, for all of these things. Which NFTs, everyone wants to make sound like, oh, who wants to buy this really expensive $1 million painting? But it's not really about that. It's about certifying something other than just a line of code. Certifying pixels or certifying video or anything along those lines. Those would potentially all be NFTs. Non-fungible token. That's all that means. All right. So that's my opinion on Solana. Big fan. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But bye for now.